How to plan your business. It's important to schedule and closely monitor the company's financial results once it's up and running. The most successful way to keep your company and its finances on track is to create a budgeting plan. This video discusses how to prepare and budget for your company and the benefits of doing so. It includes action items that help you better handle the company's finances and make sure your goals are feasible. Making plans for the company's growth. When you're running a company, it's easy to get caught up in the details and lose sight of the bigger picture. Effective companies, on the other hand, devote time to developing and managing budgets, preparing and reviewing strategic strategies, and constantly monitoring finances and results. Structured planning can make all the difference in your company's growth. It will allow you to focus your energies on increasing income, lowering costs, and increasing returns on investment. Many companies, in reality, carry out the majority of the practices associated with business planning, such as thinking about growth areas, competitors, cash flows, and benefit, even though they don't have a structured process in place. It doesn't have to be complicated or time-consuming to turn this into a unified process for managing your company's growth. The most important thing is that preparations are made, and that they are complex, and that everyone involved is aware of them. The advantages. The main advantage of business planning is that it helps you to concentrate on the future of your company and sets goals that will help it grow. It will also allow you to take a step back and assess your success as well as the factors influencing your company. Business planning will provide you with the following benefits: a better opportunity to make ongoing changes and foresee issues, dependable financial data on which to make decisions, improved emphasis and clarification, a boost in your self-assurance in your decision-making. What does your annual plan include? The key goal of your annual business plan is to lay out the company's vision and action plan. This should provide a straightforward financial picture of where you are now and where you plan to be next year. A traditional planning period for a company. Compare your current results to the goals you set for yourself last year and this year. Make a list of the advantages and disadvantages. Examine the previous year's successes and failures. Examine your core goals for the coming year and adjust or reestablish your long-term strategy. Create a budget by identifying and refining the resource consequences of your study. Define the profit and loss and balance sheet expectations for the current fiscal year. Finish the strategy. Track results, assess progress, and achieve goals on a regular basis, for example, once a month. Return to step 1. Budgeting and strategic planning. Small business owners who are just starting out may not know the value of budgeting. You will, however, need to finance your plans if you're preparing for the future of your business. Budgeting is the most efficient way to keep track of your cash flow and invest in new opportunities when the time is right. You will not always be able to be hands-on in every aspect of your company as it expands. You may need to divide your budget among various departments, such as sales, development, and marketing. You'll note that money begins to flow in a number of directions in your company. Budgets are a key tool for keeping in control of spending. A budget is a tactic for maintaining financial regulation, making sure you'll be able to meet your existing obligations, enabling you to make sound financial decisions and achieve your goals, ensuring that you have ample funds for potential projects. It points out how you plan to spend your money and how you plan to pay for it. It is not, however, a prediction. A forecast is a prediction of the future, while a budget is a projected result of the future, determined by the business plan. The advantages of a corporate budget. Drawing up a company budget has a range of advantages, including being better able to effectively handle your finances. Works should be given adequate funding. Keep an eye on things. Achieve the targets. Better decision-making. Identify issues before they arise, such as the need for additional funding or cash flow issues. Make a future strategy. Boost employee motivation. Making a financial plan. The ability to create, track, and manage a budget is critical to a company's success. It should assist you in allocating resources where they are required to keep your company productive and competitive. It doesn't have to be difficult. All you have to do now is find out how much money you'll make and how much money you'll spend over the budget era. Start by posing the following questions. What are your revenue forecasts for the budget period? Be realistic. If you overestimate, you'll run into problems later. What are the direct sales costs, such as the cost of products, parts, or subcontractors used to produce the product or provide the service? What are the overheads or fixed costs? You should categorize the fixed costs and overheads. For example, rent, city fees, and utility charges are all included in the expense of the premises. Heating, ventilation, and telecommunication systems are examples of utilities. Stationery, publishing, and postage. Expenses for the car. The price of the equipment. Promotion and campaign. Expenses for travel and subsistence. Expenses for legal and professional services, including premiums. Different types of expenditures may occur in your organization, and you may need to split the budget by department. Don't forget to figure in how much you'll need to pay yourself, as well as a tax allowance. It'll be worthwhile to draft a business plan. You will work out how much money you're earning once you have estimates for revenue and expenditure. You should examine expenses and come up with ways to cut them. You will see if you're going to have cash flow issues and give yourself time to fix them. When you've created a budget, you should try to stick to it as much as possible, but you should also review and revise it as required. Successful companies also use a rolling budget, which allows them to plan ahead of time, for example, for a year. The measures involved in creating a budget are as follows. You should take a few main measures to ensure that your budgets and plans are as practical and useful as possible. Make budgeting a priority. It will be easier to handle and eventually more successful if you take the time to create a detailed and practical budget, using last year's statistics as a starting point, but only as a reference. If you have access to it, gather historical sales and cost data. This will give you a clear idea of what to expect in terms of sales and costs. However, you must also understand your sales strategies, how you can use your sales tools, and any shifts in the competitive climate. Make budgets that are realistic. Plan for overheads and other fixed costs using historical data, the business plan, and any changes in operations or priorities. It's a smart idea to find out the relationship between variable costs and revenue, and then estimate variable costs using your sales forecast. For example, if your unit costs fell by 10% for every 20% increase in revenue, how much would your unit costs fall if sales rise by 33%? Make sure your budgets provide enough details to allow you to easily track your company's main drivers, such as revenue, expenses, and working capital. Accounting software will assist you in keeping track of your finances. Involve the appropriate individuals. It's better to seek forecasts of figures for the budget from workers with financial obligations, such as revenue goals, production costs, or precise project control. You'll come up with a more reasonable budget if you compare their figures to your own. They would be more committed to sticking to the budget as a result of their involvement. What does your budget include? Determine how many budgets you actually need. Many small companies have a single annual operating budget that outlines how much money is required to operate the company for the next year. When the company expands, the overall operating budget will most likely be made up of multiple separate budgets, such as marketing and sales. What you'll need to include in your budget. Your cash budget's projected cash flow forecasts your potential cash situation on a month-by-month basis. This type of budgeting is critical for small businesses because it allows you to identify any problems you might be having. It should be reviewed at least once a month. If you want to know more financial tips like these, make sure to give this video a like and click subscribe. Thanks for watching, and see you in the next video.